Jehan, welcome on Crypto Weekly. I just want to start asking you basically on DATs. Do you really see the momentum we've been seeing the last couple of months continue with the number of DAT launches, but also investor inflows in the space?
Thank you for having me, Henry. Absolutely. DATs are just getting started. I think what we're seeing now is the equivalent of a cruise ship being dropped into the harbor, and everybody's starting to realize that there's a new big player in the financial markets, and they are digital asset treasuries. They came out of the gate with a slow start with MicroStrategy back in 2020, who was the Genesis digital asset treasury. They incubated for a bit, and really in 2025 especially, we have just seen remarkable growth with hundreds of digital asset treasuries coming to market, not just in New York, not just in London, but all around the world, even coming to Dubai. And so we're seeing enormous growth, both in terms of the number of digital asset treasuries, as well as the types of assets that they're being backed with. First it was Bitcoin, then it was ETH, then it was Solana. Now we have TON-X, the TON Telegrams blockchain. We have BNB, CZ's blockchain from Binance. We have so many different types of digital asset treasuries that's bringing an incredible amount of depth and breadth to the space. So this momentum is just getting started. There's going to be ups and downs, just like crypto. There's always ups and downs. But what we know in two rules with crypto is the market always goes up and down, but in the long term, it always goes up.
I wish that was always the case with every asset class. But just on this point, John, you mentioned there's obviously hundreds of, over 100 of these DATs. And even in each asset class, it's in Bitcoin alone, there's quite a number of them. How do you see these different DATs differentiate themselves when it comes towards investors and the market more generally?
Absolutely. And just to be clear, there's not just 100, there's over 250 that I've seen at least that have come to the market. And these are massive, massive. Just to give you a sense of the scale, some of these digital asset treasuries, these are tens of billions of dollars for just one of them. And so we're really seeing this come to bear. Now, to differentiate these digital asset treasuries, you have a different hierarchy of factors. The first one, of course, is what is the asset? Now, Bitcoin remains king. Bitcoin is king, will remain king, may it always be so. But we're also seeing assets like high-quality top 5 crypto assets like Ethereum, like Solana, like BNB. They're all coming to the market. So with all these different assets, we're seeing differentiation for the asset class. And you have different types of investors who have different risk appetites for these assets. Bitcoin is a lot safer, and all these other longer tail assets may seem a little bit more risky, but have more reward.
And, Jehan, when you look down the line, for example, a lot of reasons these investors are accessing these instruments is, of course, there's first access. There's obviously all the beauty of capital markets they're able to leverage. But as crypto assets directly become more accessible to the broader range of investors, do you believe that's going to have a negative impact on the continuous growth of DATs, or they have such unique features that there'll be always a market for them?
The beauty of DATs is that it's a self-reinforcing cycle. The more that people in the crypto world buy the actual assets, it increases the price of the assets. And what that does, it's a flywheel for the digital asset treasuries. It allows the digital asset treasuries to trade at a premium on the public markets. And then what they do is they'll issue debt or they'll issue equity, and they'll use that cash to buy the actual underlying asset, which then in turn raises the price of that underlying asset. So you have this massive, massive vacuum that has already started, that's hoovering up all these digital assets. So you have the retail that's buying, but now you have these massive, massive cruise ships that are hoovering up all the digital assets and causing this flywheel to go over and over and over. It's really, really powerful. I think people don't understand that this is really starting to happen. And once you've started this flywheel, it doesn't really stop.
So to use your analogy of the flywheel and the continuous momentum, are there any particular regions of the world where you believe this has a lot of upside of interest? I know, for example, certain markets, there's tax benefits if getting your crypto exposure via a DAT instead of just go buying Bitcoin directly. Are you seeing any regions where you believe there'll be particular interest in these DATs compared to others?
Well, the U.S. market obviously is the dominant one, so we'll kind of skip over that. But surprisingly, Japan, and especially MetaPlanet with Simon Garovich, has done an incredible job of redefining what's possible outside the United States. MetaPlanet has very, very quickly become, I think, the #3 holder of Bitcoin in all digital asset treasuries. And so Japan, playing that arb, that tax arb, where they can benefit from holding the public stock rather than holding the underlying Bitcoin, is an amazing incentive for people in Japan to actually buy the company. But we're also seeing other jurisdictions like Brazil, like Orange. Orange in Brazil just listed, and they also have an enormous amount of Bitcoin. So these jurisdictions all have their own unique qualities and their own unique little twists about tax law or about retirement packages and retirement pensions, and that really benefits, and that kind of creates different other differentiators. We also have DDC. DDC is a New York Stock Exchange listed one, but with company out in China and Hong Kong, and so you have the ability to tap the mind share and the interest of people in Asia, while having a very safely listed, US listed kind of digital asset treasury. So you start to see a lot of these different things going around.
I love it. It's such a global asset, but adapted to the local particularities of each market. Jehan, we need to have you back on the show in a couple of months, and we'll see how this ecosystem evolves. That was Jehan Chu, the founder of Kenetic Capital. Thanks, Jehan, for being with us today.